we love the use of market analog. We truly believe that the analysis of historical charts can help us to develop better understanding of the current markets. So here we see a compelling analog between 2018 and 2022. So we have this rounding bottom structure of Ethereum and today's structure on the large cap index. So this is a basket of large cap cryptos that we have created at Wyckoff Analytics. So in both cases, we have a first attempt to stop at 0.1 with some volume increase, then an extreme oversold condition at 0.2, a test at 0.3 as a high low, and then a good rally follows on consistent volume. In this case, we see more volume, but the volume is quite consistent even in the first analog. So after this recovery of the extreme oversold condition, the market needs to digest the gains, and we see an almost flat reaction here on low volume in both cases. So flat reaction, decrease in volume, decrease in volatility. In both cases, we have an attempt to develop an uptrend. Volume increases again, but a catalyst comes and attempts to break the structure again, here at 0.7. So the price action at 0.7 could still be considered a shakeout, but we have to keep in mind that in 2020, the selling was dictated by an external liquidity event. This time, the sell-off was triggered by an internal event, the FTX collapse. So the testing is holding quite well so far, but it's weaker than what we're seeing in 2020. So if we fail to break this local resistance, and this could happen today, for example, we could spend more time in this consolidation. I think that as long as price action remains contained within the boundaries of the small trading range, this could be a sign that the selling is almost exhausted, but we have to assess this swing by swing. So we can definitely use this kind of analog to interpret the current market. But now we have seen only the first layer of our analysis. We can actually monitor specific sectors of the crypto market. And here we see 3 custom indexes that we have created. So we have large caps, decentralized exchanges, and centralized exchanges, and Ethereum here. So as you can see, after the FTX debacle, market participants are looking for platforms that provide more transparency, where users can monitor, can check the data of deposits in real time. So in every crisis, there are losers and winners. And these new platforms here, representing this index, will not necessarily replace the old centralized players like Coinbase and Binance, but can definitely gain a larger market share. And this is reflected in the price of this asset, in the comparative strength that we're seeing here, high low price consolidating in the upper part of this big trading range. My only hesitation here is that when an asset class is not outperforming the stock market, breakouts tend to have a lower probability of success. So we want to see a good confirmation, not just in index, but also in the other indexes, like the big cap index. So we want to see the laggards catching a bit at this point and more capital flowing to the ecosystem. In particular, this index has to attack the 50-day moving average to give us a final confirmation. So today price action would be extremely important. We don't want to see a failure. In case of failure, I think we will create a way more complex structure for many crypto assets. And we know also that trading breakouts in the current environment is not necessarily a highly profitable strategy, since 2022 has been more favorable for swing traders in this asset class. So you can still establish smaller trades on the intraday, just pick small part of this uptrend and so on. And we have tools at Wyckoff Analytics that can help you to identify good quality setups. And one of these tools is the heat map that we see here. So here you can see the crypto heat map developed by our Wyckoff fellow Howard. This is a screenshot made in November. The assets highlighted in green were outperforming the crypto market. So very practical approach. Let's say that you're operating on the long side and you want to operate only on the assets showing good relative strength. You can also look for assets showing gradual improvement. For example, from the red color here to green, that's usually a sign that some rotation is happening in this market. In this case study, we see a classic spring setup, down sloping structure, bull effort versus result, bullish efforts versus result, the low volume test here, and then a very tradable rally. So if you're looking for swing opportunities, you can take profits on the resistance, lock the gains, and observe what happens next. So this is a good example. We traded this asset last week too, but our second attempt was not successful. So this asset now is stalling. And we're a community, we discuss our failed trades. There's always a lot to learn when a setup fails. And you can also interact with your peers, do some post-analysis on the group and so on. I think this is very, very helpful. Now let's look at the weekly perspective of Bitcoin. There's definitely a lot of volume on the last down bar. So my preference is to have a lower volume signature on the spring action. So right now we need at least to break the 9-week moving average, because this is not the classic high probability setup. We do not have the evidence of outperformance yet. There are other areas in the market that are performing better, but at least we can manage our risk, set up our stop loss below the low of the spring, and we have adopted a very conservative strategy throughout 2022. So we have the luxury here to stock this asset now and look for a potential reversal. I think that today's price action will be extremely important. So we want to wait and see the reaction of the market, the Fed meeting, at least after 24 hours. This is my rule of thumb. But there is also another kind of analysis that we are introducing in our discussion. It's the sector analysis. So we are studying the whole crypto cycle since the very beginning. And there are definitely areas that outperform the market when liquidity conditions are poor, and other areas that outperforms when we have good, where the animal spirit of the market are showing. So in the first stage at point 1, we see defensive sectors like derivative platforms that are outperforming. Then we have big caps in the Ethereum ecosystem in stage 2. And that's the moment where we finally have evidence of accumulation, expanding breadth. So in the third stage, lending facility in the crypto space were outperforming, and this was in line with the low interest rates environment that we've seen in 2020. So money cycle, business cycle, and crypto cycle. And then the other sectors were joining the uptrend in 2022 and 2021, and the real peak occurred in late 2021 with the NFT sector that shows a striking correlation with the real estate market. That was the peak. So we have to pay attention to the internal, and I want to stock this market and look for some kind of a switch from stage 1 to stage 2. So in the current stage 9, we see that many defensive asset classes like wallet tokens, decentralized exchange are currently outperforming. I want to see a clear break of this level. So I come back into the trading range, and also signs of rotation with internals and more aggressive sectors outperforming. That would be a confirmation from the internals of the market.